Good afternoon and welcome to the Spreadex market report for the 22nd of June. Throughout the world, markets were seeing steady growth this week until global manufacturing data rocked the boat, with markets turning as investors shunned risk-on positions. China's HSBC Flash Manufacturing PMI reported an 8th successive month of manufacturing contraction, whilst the US Philly Fid Index shook markets with its worst figure since last September. Other prints from Europe did little to improve the mood. We saw the Dow Jones retrace 250 points yesterday for its second biggest loss of the year as a snowball effect emerged following the figure and consensus that the Fed had not done enough to provide further stimulus to the economy by pursuing with Operation Twist. The week started on a positive note, with the centre-right party New Democracy establishing a victory in the Greek elections. The pro-bailout party has formed a coalition with PASOK and the Democratic Left in a move which should add stability to the debt-stricken country. The coalition is seeking a 2-year extension to reach bailout physical targets, an extension they seem likely to get. However, Greece stands to lose its status as a developed country on the MSCI World Index. The index provider placed Greece under review late on Wednesday in a move that could affect whether institutional investors with mandates attached to MSCI classifications can invest in Greece's stock market. Eurozone sovereign bonds rallied on reports that the Spanish banks would require as much as 150 billion in capital. However, independent auditors say the figure is more likely to be around 62 billion euros. Spanish bond yields peaked above the 7% mark, the level described as untenable by the ECB. Commodities were not immune to the sell-off, with oil dropping below the $80 a barrel mark, with poor manufacturing figures and high inventory numbers shelling the demand for the black gold. The news that QE is to be put on the back burner harmed gold as it dropped 3.5% over the course of the week. Silver lies on its 2012 low, whilst the gold-silver ratio is at a 20-month high. The Fed was not alone in discussing QE, with the Bank of England voting 5-4 in favour of keeping theirs at 325 billion. This, though, however, is a sway in favour of easing, after previous votes held an 8-1 majority, with extra stimulus on the cards more than before after falling inflation figures. As stock markets started to tail off in the middle of the week, one equity witnessed some extreme volatility. Invensis surged 70 points before dropping straight back the following day after a preliminary approach from Emerson came and went. The company has been surrounded by bid rumours, but this is the first time the stock has reacted to news of a potential buyer. Whitbread announced like-for-like sales at 4.5%, while Severn & Trent launched an RPI-linked 10-year retail bond. Aer Lingus announced Wednesday that it had shot down a surprise bid from Ryanair to seize control, saying its offer is far too low. The former state-owned airline said it was unlikely any buyout could be completed anyway, considering Michael O'Leary's firm is already being investigated by the UK Competition Commission over its existing 30% share. Ryanair's fresh offer would value Aer Lingus at €694 million. Now we look to next week. Particular figures to look out for are the public sector net borrowing and current account data from the UK on Tuesday and Thursday respectively, whilst all day Thursday there is an EU summit. It's a quiet season at the moment for reports, but the prominent ones to look out for are Ocado, Carpet-Wright, Standard Chartered and Debenhams.